morning, good afternoon, or good evening. I have no idea what time you're watching this, but it is 11:03 p.m. Sunday night over here where I am. It is 11:03 a.m. over there on the East Coast, as long as they didn't do daylight savings time yet, which I don't think they did. And I have for you not really a week in review looking back at the week of October the 10th, but more a preview of the week ahead as we have both OPEX and earnings kickoff for Q3. Now, I mentioned to you in the room there on Friday, and it had been my intention during the course of the middle portion of the week that I was going to give you a big, wide view of everything, because once again, you best case scenario, you got 18 months. Best case scenario. And I know that there's 98% of you that will not make decisions like I've made in my life, or some other people that you watch, who people glorify, but you got 18 months best case scenario, and well, let's just get over it. So yeah, the volatility expected the week ending October 10th prep. And in the email, again, 6 green closes in a row going into Monday. Essentially 9 green weeks on the SPX, because the one red week a few weeks back was only down 10 points. And again, this one being one that I covered, quite a bit ago, as we were back at that 6370, 6353 area, and I went into detail about the big, broad, wide view of everything. Your October candle is 666,492. It'll be that candle for the entire month. And we'll get to that in a minute. If you didn't get the Hunt for Red October, I'll try and make because I missed out here with October properly spelled compared to how I've been spelling it all month, October. Again, just going through how you got started, preview, 5 green months in a row, 6 green months in a row, 6 consecutive green closes, how many times it's happened. Here's your trade for October 6th, looking for that red close, and, you go down, and then talking about, again, with October 7 being the full moon, and October 10th being the Fibonacci spiral. Now, rather than ask a question, what's Fibonacci time spiral? I just learned about it not even 10 months ago, and the education I got was reading on Google search. So do your Google search, because some things are going to be written in ways that you don't really understand, and other ones are going to be written very simple that just clicks with you and you get it. And you don't want to waste time trying to understand it. But as I said there, yes, we can extend to 6790 plus or minus 20, but you're chasing pennies, and the continued to week to rally view has been working for months. What I mean by that, which I have been pretty clear about, is, okay, you can do 100 push-ups, no problem. I will bet that you can't do 105. If I want to take a little bit more risk, I'll bet that you can't do 95. But I know that you're going to be able to do something more than 90, so it's always been playing the call credit spreads constantly, even though the market's been going up, because it's been too weak to rally, and, results speak for themselves. So anyway, a typical wave 4 matches what wave 2 correction would be, around 380 point dip, blah, 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 blah. You have the email. And then we went into Thursday with, again, the NVIDIA 195.95 is near, and I'm on to Thursday because, well, obviously it got a fucking typo, which these writing all this stuff during the day, and the Kristalina Georgieva move on the IMF that happened there Wednesday morning, and how we had 6 new all-times in 7 sessions. Time to rip the Band-Aid off, Mom. Your risk begins over there for your trade there on Thursday. Again, here you're fucking around, find out risk above for the weekly candle. Same shit. October 9th, October 10th, 67.45, 67.40. And over on to last week's highs. Where is it? Blah, blah, blah. But anyway, for the QQQ and the 609.79 top alarm, December 19th, 600, 590 are the strikes I would look towards if looking to enter a new puts position. Downside target, completely unchanged. And again, that 195.95 fake print on NVIDIA from way back in June of 2024 finally showed up there on Friday. So, again, going in here to Friday, fuck around, find out Fridays. You were all week, $3.50. You were down to around $2.50 going into the open there on Friday, the 67.45, 67.40s. The October candle never changed, never ever changed. 67.05, 6700s, they were up at $3.50 early part of the week. Da-da-da-da. And again, how the week had been with absolutely nothing going on. So full credit both prior days, Fibonacci spiral date being today, da-da-da-da. And again, with the Fibonacci spiral, looking for October the 10th. Unfortunately, it did not happen. You got it on October the 9th. And so again, where your risk begins, 67.65, 67.60, $2 today, $2.50 for tomorrow. Boom, boom. And then here again with your 67.45, 67.40s, $3.50 there on both days, Thursday and Friday. Once again, your fuck around and find out risk is the minus 6,700 move. Now, why is that? Well, again, being a tracker and understanding how red and green weeks work, green weeks, who cares? But looking for that red week, with the red weekly candle being 67.3386, what are they going to do? Go down -1? Yeah, 67.15. Quite possibly, like we showed with Georgina, get up there into that minus 6,700 to get that 66.99.96. That bullshit move that I talked about there on Tuesday. Get out, get out. And what did you get? Well, we'll look over at the charts, because on Friday it really was oh, come on, man. Really? Seriously? We're really going to do this again? Well, let's minimize this and come up onto our chart, and we can get the calculator off. Because Friday, open up 9:30, 67.40. Ooh. And then pushing up 66, 67, 62, 40. And then just kind of slow. And then all of a sudden, because what is this? What is this? What is this? Oh, jeez. Again, here we were going into 11 o'clock, but we had already had a warning. Where was our warning? Our warning was right here. 10:50. Oh, okay, so it wasn't a warning. It was right there at 10:58. China becoming very hostile. And what you had there just shortly afterwards, posting here at 11:13 a.m. there on Friday, and I've kind of ripped this apart a little bit. Some very strange things are happening in China. They're becoming very hostile. So I went over here and took that same thing and highlighted the subliminal declaration of war. Some very strange things are happening in China. They're becoming very hostile, sending letters to countries throughout the world that they want to impose export controls on each and every element of production having to do with rare earths and virtually anything else they can think of. Well, I mean, what do you expect? I've always felt that they've been lying in wait, and now, as usual, I've been proven right. There's no way that China should be allowed to hold the world captive. You followed off there, at the end. I was to meet President Xi in 2 weeks at the APEC in South Korea, but now there seems to be no reason to do so. Well, just to let you know, in case anybody who hasn't followed, he's already backtracking on this. He's already backtracking on it because of what happened there on Friday. So anyway, we'll just follow through a little bit. And yeah, again, here on Friday, it just gets worse and worse and worse.
Ah! Shit! Fuck me! Shit! What the fuck? I don't fucking know! Fuck! Stop screaming! Stop!
And you got your biggest decline in your recent history. The biggest decline since the last time I shaved. Actually, no, I hadn't shaved until prior to that. Down here to 65, 50, 78, right into the final hour of the day, as we did a good job holding that 6600 area right until that final hour kicked in. When all the over-leveraged margin calls started coming in. And I'll get back to the charts in a couple of minutes because I want to come back on to where our data is. And again, after the market closed, Trump came out saying, it has just been learned that China's taking extraordinary aggressive position in trading. This came out at 5:02 after the market had closed, putting 100% tariffs on top of the tariffs that are already there. Well, I hate to tell you, but you're still going to buy shit from China. All you're doing is making it fucking worse. But there again, it's because you needed a why. You needed a reason. There had to be a why for it to all take place. And this can actually be highlighted in yellow because it is an over 100 point range trading session on the day. And he had a 211 point trading session on the day, which nobody was prepared for unless you were prepared for it, which I tried to make everybody prepared for it. 1, 2, 3, 4, 5, 6, 7 gap ups in a row. And where did you go to? Where did we drop to? We're negative on the month. 65, 50, 78. 65, 69, 22. The FOMC low, 65, 51, 15. Woo-hoo. We didn't do shit. All we did was clean up the overbought. We didn't do nothing. But we did make money on it because over on the spreads, been a good week. You had your 67.30, 67.25s, which, like I shared, had to close it out. You had that same full credit over there, 67.45, 67.40 on Tuesday. We failed on Wednesday because of Georgina, which you got to roll to 10.31 if you chose to. Could have taken the $2 loss. You got your 350 full credit over on Thursday. And then here on Friday, which actually this has to be green because I had to extend it because you had 4 trades that were going on there or 3 trades going on Friday. 67.45 40s, 350, 67. No, what the fuck is this? Oh yeah, the 67.40, 67.35 weekly, 350 full credit. And then to fuck around, find out Friday, 67.05, 6700, $4. Now you'll notice I didn't put the 67.65, 67.60 from Thursday or Friday in there because that would be too many wins. And that would make my, win-loss ratio and my win percentage, which 81.53% for the first 9 months of the year, it would take it out of balance. So I leave it the way that it is. But we did get minus 1%. We did break below the safe edge on the lower end, and we now have minus 34 trading sessions without a plus 1% day. So guess what? Pucker up, Buttercup. 65.85, 65.80s. Where are you? I know I have you on screen here. Where are you? I know I've got you there. You are. For Monday, October 13th, your risk trade, should you choose it, buy the 65.80 puts, sell the 65.85 puts. Can't get you an accurate price because the market's closed. It's Sunday, but they were right around $3, $3.20. Middle area, $3.50 on the ask. At the end of the day, they're on Friday. As of right now, fuck it. It wasn't like that an hour ago. Futures are already up 0.5%, plus 249 over on the Dow. And again, because of the Donald Trump backtracking of what he said on Friday, which all just comes back to show you it's a fucking video game. It always will be a video game. But yeah, going back to your day there on Friday, again, your credit spreads, you've got limited profitability over on your alerts. Same shit. I focused on the 612s on QQQ. That was where I was putting my attention. No, not that, but right here. So your QQQ 612 puts, $1.04, made another post right after that. They were under $1. For every $100 that you put in, you made about $2,000 maximum. On the 610 puts, for every $85 or less, because they dropped down to 29 cents, you gained close to $2,000 maximum. Then I got a message from somebody. It said, you should have told us to buy the 600 puts. They were only 4 cents. They went over $10. So I gave him the best opportunity in the world, which is to fuck off and go join someplace else for guidance. Because, again, what we have are people that know how to take the information and make a decision on that. Like Rick's son. Messaged me Saturday night. His son got into 6705 puts, 30 contracts, 2.2 or $2.25. So call it $6,000, $7,000 on the trade. Made $450,000 on the trade. And then I had a question after, I'm not paying attention during the weekend. But then, I look over at Nancy, who posted after the end of the day, and she's got 6740s, $5. They went to $185 full credit. And then she had the weekly trade, the 6740, 6735s, $350 full credit. And I looked over, I said, $980,000, 5 contracts. How the fuck did you do that? She goes, what 5 contracts? I had 50 contracts. I always do 50 contracts. You did? She goes, well, yeah, it was the week. So this is a typo for anybody looking at that. She had 50 contracts over here on the 6740s. So roughly the $25,000 that she had already taken in profit during the course of the week off of some of the spreads, like she likes to do. Full credit over here on Thursday, full credit over here on Tuesday, nice little scalp there on Monday, and that failure to be rolled over onto, if you didn't want to take the loss, to roll it onto 1031, which again, if you rolled on to 1031, well, over here at 65.52, guess what? You had your opportunity if you wanted to go and take your profit. And I know I'm spending a little bit of time on here, but it's worth it because we're red on the month. Red on the month of October. We are down 1.69% for the month of October. This has not happened. We were red one day on August 1st. One day. We were red one day back here on May 6th. After starting the month of May out, red. So be careful, because we were looking for a dip. I prepared everybody for what we were looking for, because once again, we are going into earnings season. Earnings begin this week. So even if there is going to be more downside to come, it's earnings season. There will be another trigger, and you have no Mag 7 reporting until the end of the month, and at the end of the month is when you have your FOMC meeting. As long as you have your government shutdown, you have absolutely no data to be able to use, and once again, everybody has already came out with a very loud voice saying there will be no rate cut come October. So you have a couple of weeks for everything to settle down, and over on the QQQ with a minus 3.55% move, where did you go down to? 589.05. What were your September 25 lows? 588.50. What was your FOMC lows? 584.37. So call it what you want, but regardless of what you want to call it, you essentially have yourself a little tiny triple bottom. So let's get on to the charts so I can let you guys go and do whatever the hell it is that you want to do. Sunday, here we are. It is now big, broad, wide view. I'm not going to waste time on it because there's no reason to waste time on it. because the same reason like what I was mentioning already, and I'll bring over my other screen. Here is your Nikkei over here on the top left. Granted, it is a 30-minute, but I'll go ahead and put it on a wider view. Here's a 4-hour. Extremely oversold. Here is our 4-hour over on the Dow Jones. Extremely oversold. Here is our 4-hour on the SPX. Extremely oversold. NDX, Russell 2000, you're starting to get the gist. Over here on the 1-hour on the SPX, oversold. NDX, oversold. So whether you like it or not, as you saw yesterday on Friday, the bond market crashing, the dollar crashing, everything crashing except gold, crude oil crashing. It's a margin call. It's a big, huge, over-leveraged margin call, and the big, broad, wide view of everything talking about, hey guys, get ready for 3,400. It's a waste of time to talk about right now, because no matter what, when you get oversold, you're going to get bounced. Now, it's not a buy the dip, but look how you came down right to your 65.51, right before the bears get control, right before they get control. So you're looking at 66.03 very clearly, and like I shared for you, our upside for a plus 1% day would be right around that 66.20 area. So guess what's coming on Monday? Plus 1%. Next over here, if we can scroll over, the QQQ. Boom, boom. Big, nice, oh my God, move to the downside. Well, you're looking at least at a minimum of a 38.2 retracement, which would bring you right back up to around 600. I think I drew the same thing over on one of my charts. Not on this one. Okay, well, whatever, I'll get it to you soon. You're looking for a bounce of at least around a 38.2, if not a 50% retracement, which would bring you back up to in the 600s over on the QQQ. But the green target level down here for that wave 4 correction has not changed. You'd be looking somewhere right down there around 573, which is why I had in your email there 560 remains to be the target. Here's your QQQ. Here you go. Big, broad, wide view, which again, don't want to waste time on. But yeah, you had a minus 40-point move on your wave 2. Your wave 2 was rather quick. Over here, April 9th was the top. April 21 was the bottom. Not saying that it's going to be the same time length, but expecting to see a drop right down there to around 570, possibly down to 560, would make absolutely perfect sense, and you would very likely have an oversold daily. And again, then we go into February, like I've mentioned before. And here's your VIX. Your VIX being above 2102. Now, you could go back as far as you want to go back about your VIX 2102. Here, fire Powell. Here, I'm going to fucking fire Powell. Back on August 1, after we had the major market sell-off. Here's World War III, where we attacked Iran. 2102. That you're Bucky Larson blowing your fucking nut. DIA, Dow Jones, 50-day moving average, boom, boom. All right. So, and on the IWM, not the 50-day moving average, but right to that 238. So I did look at the trade to see what the profit percentage capability was, but you know, when you look at it at the end of the day and you look back at what the simplicity of it all is, you know, there you go.
We're going to win so much, you may even get tired of winning, and you'll say, please, please, it's too much.
Fuck it, had enough of that shit. Again, you know, here was your Friday. Now, psychologically, I already know what the problem is, because one would rather put money into a trade and lose it and it not work out, and then be able to blame something, rather than having gotten into any of these trades and taken the trade off early and seeing what they could have made. That would basically kill you. And I know that it's killing and eating you, a lot of you up over the weekend, like, you know, 2 of the phone calls I had. You know, one guy made 40 grand. He thought, holy shit. And then he said, what the hell did I just do? As he had already just closed the trade out, and he would have made $500,000 on the trade. So there we are. Again, you know, SPX, big red week. Okay, finally, red week. Yay, hooray. So big fucking deal. Over here on the spreads, finally got minus 1%. Not that we needed it, but we have 34 trading sessions without a plus 1% day. Looking at plus 1% from the lows, that would be 66.1629. Plus 1% for tomorrow would be 66.18. The Dow futures are already up nearly 0.5%. So you're going back to 66.18. Whether you like it or you don't like it, it really doesn't matter, because as you bloom out and you see where your 66.18 was, how we were resisting here for quite a good time, went into the FOMC meeting and spiked up above it, you're going back to it. So you're going back to 66.18 no matter what when we get here into Monday morning. I'll see you guys in the chat room. Have a great weekend.
抓我啦！